Hey guys, how's it going? Happy Friday. Let me finish setting up this room real quick and then we can get started. Looks like you guys took a couple trades last night. Looks pretty solid so far. I'm gonna finish setting up this live session real quick and then I will set out the link and we can get started. So market just opened right now. It's 6:30. Probably gonna see some spikes for US 30 and then it'll smoothen out the next 10 minutes or so, which is perfect. So today is March 26th, guys, last week of March. So hopefully you guys had a great trading week, trading month for March. I sure did. I'm pretty sure a lot of you guys did too, because the last couple of weeks have been pretty fire. But here we go into April. These are the last couple of months to lock in some massive profits until we enter the slow session for summer. But since we're scalping more often now, I think it shouldn't be a problem, because even if the market's slow, it's more so slow for the for the bigger time frames, not necessarily for the scalps, because we'll still be catching trades regardless. All right, let me finish setting this up right here. And then after this, I think we're good to go. Yeah, we'll see how this plays out for US 30. Check these zones real quick. Just gonna redraw all these zones. A lot of these have changed since then. Let's see. A lot of zones in this area. Looks like US 30 was just, it was just ranging like pretty much all yesterday or last night, I guess. So that's why it's kind of hasn't really provided much clarity. So let's see, we got a zone right here. Zone right there. All right, cool. So let's turn that off for now. All right, so I think the room's all set up. Let me just get this link sent out to you guys real quick. All right, cool. Let's pin that up right there. I'll get you guys a Zoom link shortly. It's only 6:34 anyways. So we're not trying to rush into these trades, especially since it's Friday. But it looks like there might be a good entry there for that opening candle, which I'm not going to take. I don't think I'm going to trade today, guys, because every time I try to trade Fridays with you guys, even though I tell myself I shouldn't, and I end up trading with you guys, it never ends up well. It ends up with a loss. So I'm not going to trade today, but I will give you guys trade ideas, and I'll show you guys, specific entries that I see here, and I'll let you know how risky I feel about them. So yeah, let me get this to our social media real quick, and I'll send you guys a Zoom link as well for you guys in the premium, so that you guys can follow real time, obviously. So let me just get this email sent out to you guys as well. On the Facebook, even though nobody goes on the Facebook. And then I'll get this on Instagram real quick too. All right. I think we're good. So next up, I just need to send you guys the Zoom link. And I think other than that, we're pretty solid. All right, let that load up. We're good. Let me get the Zoom link for you guys right here, and then I will pull up the pull up the chat right after. See, this is why we don't take the opening candle. Look how choppy that is right there, right? It's not necessarily easy to see. All right, so this is a link for you guys. You guys are good. All right, let me pull up the chat real quick and see what's going on over here. All right, cool guys. So let's see who's in here. Hey Pierre, morning. Morning Steven, morning Peter, morning Manifest, morning Josh, morning Sharul, morning Ed, morning everybody. I just saw your message right now. Morning Matt, morning everybody. So happy Friday guys. Hopefully you guys had a great week so far. A great month overall. This month is about to end. It's March 26th. So I think we start February next month. It's been a great trading month so far. It was kind of slow in the beginning and then we picked up the last 2-3 weeks. And it's been pretty solid for the most part. So if you guys sat in on the live session yesterday with Josh, we actually went over his 3-minute strategy. So if you guys haven't seen that, go ahead and rewatch it. All the details have been covered there. It's still a work in progress, guys. But if you guys did follow us, the win rate for that strategy is insane. I think we covered a US session and it was at least like a 90% win rate for certain days. And I think last night it was like 5-1, which is amazing. You know, that's a crazy win rate, 5-1. So like 6 trades divided by 5, 5 trades divided by 6. It's about an 83% win rate last night if you were to apply that strategy. And I did see some of you guys lock in profits yesterday. Let me see. Nice. Look at Trell over here. He'll show off. He got 707. He just scalped that right now. He said, holy moly, made back my losses. Nice. Congrats, bro. So as you guys can see, if you guys apply that strategy, you know, Joey over here took the strategy too. He made 2,000. Kimmy over here, he made 76 on one account and then he made 13 on the other account. So nice work amongst everybody here. Mondra over here killed it to 1,000 last night. I saw the messages last night. Everyone went to sleep, but Mondra stayed awake and he was like, I'll watch the charts for you guys while I go to sleep. And he locked in a nice 1,000 in our sleep. So nice work to everybody who did well. Trading last night. I think I'm going to stop trading during Asia session because it's just, it just seems a bit risky for me personally. But you guys have been killing it. So great work. And then we'll take a look at that shortly. Morning, Sam. Morning, John. Morning, David. Josh said there were 3 more wins after that. Wow. Okay. So Josh said there was 3 more wins. So there was a total of 9 wins. Actually 10 trades. So 10 divided by let me see, 9 divided by 10, or no, it was like 8 divided by 9. So the win rate was actually like it was 88%, I think. Yeah. So last night's win percentage, if you were trading that's Josh's strategy, I think it was an 89% win rate, and I could see everyone's profits here. So, you know, it looks like it's pretty solid. So right here, guys, this would be an entry for a scalp using the 10-minute. You know, I'm personally not going to enter this trade. If you guys want to enter it, you guys can. But like I mentioned, today's Friday. So I'm not going to enter any trades. I'll just give you guys trade ideas and you guys can take them if you want. I'm personally not going to take these trades because of the riskiness of, you know, this nature trading on Friday, because it never plays out well for me, guys. Like, you know, if you get burned one too many times, it just makes you not want to trade during that time. Not to say that the trades don't hit on Friday, because there were some good trades a couple Fridays. I think there were like some Fridays where people were killing it, just like knocking out, blocking profits like left to right. But for me personally, you know, it's like a bad luck thing for myself. I just don't feel comfortable trading on Friday. So if you guys want to take this trade, you guys can. It's not going to count towards the results. But if you guys want to take it, you know, go ahead and feel free. It's already in profit. So if you guys were thinking about it, it might be too late. It's already in profit about 120 pips. So I'll keep that marked up there, and then I'll answer questions today. So today is going to be mostly a Q&A day. So if you guys have any questions and you guys want me to cover anything, we can. So we will we'll be able to clear up any confusion and bring some clarity to you guys if you guys are still confused about a couple of things. So definitely, we're good to go. Hey, Billy, how's it going? Morning. Morning, Emmanuel. Morning, everybody. So we'll keep following through with this. I'll look at the other indices as well, and I'll see how all of those are moving. If you guys have any Forex pairs that you guys want me to follow, I will take a look at them as well. I don't know if Kirsten, if you're in here. So Kirsten, you asked me about GU. I messaged you as well. So Kirsten was asking why GU was pushing up right here. If you guys followed the news last night, there was GBP news, and it pushed up the pound. So like they had retail sales for GBP. It was actually it was negative. I thought it was positive. Let me refresh this. I was looking at the wrong one. I was looking at the USD. So there was GBP news, which was actually, it was positive. It was negative 8.2%, but it went positive 2.1. So it was positive news for the GBP and also for the Euro news. They had the German IFO business climate. It was positive as well. So positive news for both GBP and Euro. And that's probably what caused the GBP to push up, because Kirsten was asking, you know, why was it going up when both of these are bullish? And you can see right here, the pound, it is kind of bullish right here, but the dollar started to get bearish right here. So that's kind of what gave it its momentum push even higher right here, because, you know, there's a split in strength with regards to the British currency and the dollar currency over here. So, you know, that tied in with news that probably what pushed price upwards. So let me go back to the pound. Let's see. So like from right here, it's pushed to about like 50 pips. Pretty solid move for GU over the London session. So other than that, let me see if there's anything else over here for us to look at before you know, we continue on. So here's the see, and this is why I don't like trading during Friday, because you're gonna get these weird movements. It looks like US 30 has just been going sideways since let's see, since the previous night. From the 25th, it looks like price has just been going sideways within this whole area right here, between these two structures, this upper structure and this lower structure down here. It's basically just been going sideways for the most part, but it is looking bullish now. So we'll see how this plays out. But like I mentioned, guys, today's a risky day to trade. So I don't recommend anyone to trade today, and I don't advise anybody to. But if you really want to trade, you guys can. You know, I'm going to give you guys trade ideas, but none of these trades today are going to fall under the official trades, and they're not going to be any of the K2. They're not going to be included in the K2 results. So just keep that in mind if you guys decide to you know, take any of these trades. So these are all at your risk trades right here. Other than that, let's see what else we got over here. See, we got this. I'm going to go down the Forex pairs real quick and see if there's anything else for us to look at over here. Odd cat. I was going to call this last night. It looks like it dropped into profit and then it swung back up. Dropped about 65 pips in profit, close to 70, and then it swung back up. Let's see what else we got over here. Odd CHF. This would have been a good trade right here. We had a rejection off this point. Buy signal right here. And then bounce up from that point. So this would have been an entry for Odd CHF. I was going to call this last night too, but because it was Thursday night, I didn't call it because we don't like holding trades into the weekend. But yeah, technically, if you took this trade here using the K2SR strategy, it would have been hitting at least halfway to TP and then on its way to full TP right there. Odd JPY. There was a couple entries that were available here too. Rejection off this point. Buy signal right here. Pushed up to this next structure right here. Once it closed above there, we would have had an entry at that point to right up here. So that would have been another entry there for odd JPY if you guys want to take that buy. Odd NZD. This is one that I was looking at last night too. There's a couple entries that I was looking at last night, but they all came kind of late. So for example, right here, we had a rejection off this point, a buy signal right here. And if you were to take that trade, it'd be currently, you know, a little bit above profit. And that's why I have the markers right here, because I was going to call these trades, but decided not to last night because it just felt a little risky. Price never broke below here, so there was no sell. Price ended up shifting upwards. And this is why we wait for confirmation, guys, right? Because if you guys remembered, we were looking at odd USD last night, and I said, don't enter the sell until it breaks below here. And this is why, because if you entered a sell already right there, it would have reversed on you. So now price has shifted. We're no longer looking for a sell. We're now looking for a buy for odd USD. We have a rejection from this point. We have a buy signal right here. Now the next thing we're waiting for is for price to break and close past this structure right here. Once it breaks and closes past that structure, we can anticipate price to shoot up from this point over here. Other than that, let's see CAD CHF. Looks like everything's moving pretty smoothly after yesterday's moves. So like we had a rejection from this point, buy signal right here. As soon as price broke structure above here, price ended up shooting up to this area up here. And then as soon as price broke structure again right here, same situation. It's going to push up even higher. For a long position right there. So that's it for CAD CHF. KJPY, let's see, same situation here. It's the same pattern that just keeps repeating itself, right? I look for the same thing. I identify a rejection point, I identify a momentum signal, and then you can pretty much ride that up. If you took this trade here, it'd hit full TP for 61 pips right there in that direction. CHF JPY. It's a small little move. This is probably gonna push up to this structure right there. Euro odd. Looks like this over here. That's weird. Yeah, it looks like Clinton's trying to get into this video, but it says that, yeah, I don't know what he's using. All right, sorry guys, I was just looking at the messages right now. Clinton was trying to get into this room, but he said that he has like some issue. Has anyone had this issue before? He tries to open the video, but then like I don't even know what app is he on. I've never seen this before. This play or go button. Anyways, let's go back to US 30. Yeah, so see how far US 30 is dropping right here? This is why I don't take these trades. And this is why I didn't call this as an official trade. So this is why we don't trade on Fridays, guys. And this is why I didn't take this and why I told you guys it was an at your risk trade. Because stuff like this happens. It's going to be choppy all throughout the day. But we'll see. Hopefully it swings back up if you guys ended up taking that. And then we'll end up looking for any other possible entries. One reason too that this becomes risky is because there's entries in both directions. So that's another reason why I wouldn't take this trade. So as you can see right here, price is going sideways, right? And even though we saw this this buy entry right here, I just noticed that so there's a buy entry right here, and there's also sell entries right here. So when price is choppy like this and there's entries from both directions, you can see there's a buy entry right here. Buy entry, sell entry, buy entry. There's just it's so uncertain that you don't know which direction to trade in, right? This can literally go either way. It can either spike up or it can spike down. There's two different ways it can go. And this is why we don't take trades on Friday, or we don't take trades when price is choppy for the most part. Because it's really going to be hard for it to set a direction. Let's pull up CNBC to see if there's any actual news going on pushing price. Looks like everything's bullish though overall. See, SoFi gives an amateur investor early access to IPO. Very good. Trying to see if there's anything else here that we should be looking out for. Yeah, I don't really see any other news today. But then again, there's like random stuff that happens. Like yesterday, Biden had his first presidential, I guess, address or speech or whatever. And that wasn't even on the schedule. He just kind of spoke midday yesterday. Other than that, there's no other news. The other news that's technically running right now is the Euro Summit. And that's running all day today. So that's probably the only other thing that would be affecting the market. Damn, look at this huge dump right here. Yeah. So I don't recommend trading today, guys. If you guys want to trade, you guys can, but like I mentioned from the beginning of the session, I'm not going to trade today. I don't recommend anyone else trade today. But if you guys want to trade, you guys are more than welcome. If you guys have any questions though, go ahead and put your questions in the YouTube chat and I can answer any questions for you guys. Nice. How's it going, Smokes? Morning. Morning, Flynn. Oh, where you been, Flynn? I haven't seen you in a while. I'm assuming you've probably been trading in the background. You've just been doing your own thing, which is normal for everybody. All right. So other than that, let me check the other indices as well, since I know most of you guys are more focused on these indices. So if we look over here real quick, let's see. We have zone up there. And this is always the first thing, guys. So a lot of people always ask me, what's the most important thing to do when you start analyzing a chart? The most important thing is to draw market structure. First, draw your market structure so that you can see what's going on in the market. And then once you're done with that, then you can start looking for ideas and focus on, your bias at that point. But first and foremost, you should always be focused on identifying market structure first. I think that's going to be the most important thing and the thing that you should always do first. So in order to do that, we just turn on the K²SR indicator and we draw our zones over the K²SR zones. So once you guys have all that drawn up right there, then you can just hide the indicator and you guys can see how much easier it is to identify what's going on right here, right? So this is how you can identify your bias. Like for example, here, if you saw price going up, then you're looking for bullish moves. Vice versa, when you see price stuck in this area right here, it's just consolidating, right? But another hint that you can look at is that you can see that price is actually bouncing from each zone. So it bounces from this zone to this zone, from this zone to this zone, right? And then from this point, where did it go? Down to this zone right here. It's the same thing. It just keeps bouncing within these zones. So, with that said, if you've seen price bouncing between zone to zone, what do you think is going to happen right here? Price is probably going to be bullish and it's going to push up to this zone right here, right? It's just going to keep bouncing around. But that's not necessarily what can happen. This is like one scenario, price can go up. The other scenario is price can go up slightly and then come back down, right? But this is what I mean about, the most important thing is to draw your market structure so you can start developing trade ideas. So if you see that price is consolidating right here, you have two biases. You can either look for price to go and test this structure up here, or you can see that price, temporarily pushed up and then now it's going to come back down. So once you have that, you have two scenarios in your head, right? So once you have two scenarios, that's when you can start identifying more things in detail. So if you're looking for a buy right here, what are you waiting for? You're waiting for a retracement and for it to bounce back up, right? So you look for a wick rejection off the wick over here, off the pivot, and then you'll catch it right back up if your bias is for a buy. Vice versa, if you're looking for a sell, you're waiting for price to break below the structure right here, right? You're waiting for price to come back down, break below here. That way you can take a sell. So that's pretty much how you guys should be analyzing things. First, identify your market structure. Next, identify how price is moving by looking at market structure. And then after that, you can start developing your analysis for trade ideas. Because once you have two scenarios down, then you can drill in on, what type of things are you looking for here? Are you looking for price to break above here to go for a buy? Are you looking for price to break below here so you can take a sell? Are you waiting for price to go sideways so that you can, figure out whether you want to take buys or sells? It's really up to you. But that's how you'll be able to be more confident about your trades, because you actually know what's going on. You're not just guessing. You're not just like, oh, this looks like it's going up, so I should take a buy. No, you should probably look at it from a reason. You're like, oh, this looks like a buy because we have a rejection from this point. And generally what happens is price bounces from structure to structure, right? So then you have an idea, you have reasoning behind your idea. You're like, oh, this is going up because there's a rejection from this point and it's bouncing off the pivot. That's a better explanation for why you're taking a buy. You're not just entering a buy because someone tells you to enter a buy, right? And you guys should always understand and be aware of what's going on in the market. Because if not, that's how you guys lose trades and you guys don't know why you lost a trade. It's better to lose a trade and actually know why you lost it rather than, lose a trade just because you copied someone's signal. Because then you can learn from that. Like once you lose that trade, you're like, okay, this is what I did wrong here. This is what I can do different for the next trade. And that's how you guys get better at trading. Being a professional signal copier will only get you so far. And I always remind you guys that because, if you guys don't know what you're doing, then you're just never gonna trade blindly forever, and you're never gonna be a better trader that way. So just keep that in mind. Anyways, Billy said, "Hey Shawn, so that 10-minute strategy, price can just wick off a pivot anywhere in a zone to make a signal. Doesn't there need to be a top or a bottom zone?" Sorry, but let me read your question again. So Billy said, "Hey Shawn, so that 10-minute strategy, price can wick off a pivot anywhere in a zone and make a signal. Doesn't need to be the top or bottom of a zone and pivot." Sorry, Bill, I'm like kind of confused with your question. But here, I'm going to go down. I'm just going to show you an example of the strategy. So let me see if I could find one here. I don't think there was any recent entries here. Let's see if I could find something here. All right, let's go back to US 30 real quick, and then I'll look for an example for you guys. Or let me go to a clean chart, or it doesn't matter. Let me just go here. US 30. All right, so let me see if we could find something here. So all right, so like the one that I was just looking at right here, this red candle. Yeah, so looking at this candle right here, Billy. So Billy's question said, "Hey Shawn, so that 10-minute, you said 2 candles that wicked off the center of the zone." Yeah, so for this right here, if you're looking for a buy, you're just looking for a rejection off the pivot and structure. So you can see that this red candle right here, this bottom wick, is rejecting off this orange pivot and this structure right here. So that's what you're looking for right there. Same with this green one right here. So for this green candle right here, it's the same situation. See how this wick is rejecting off this yellow pivot and the structure? If you're looking for buys, you want those 2 rejections on the bottom. If you're looking for sells, you want the rejection from the top. So let me see if I can find a different one over here. So for example, let's see if I can find one over here for you. Like this right here. So for this green one right here and this red one, see how the wick rejections from the top? You want the wick rejection from the pivot and the structure from the top on the candle if you're looking for a sell. Vice versa, if you're looking for a buy, you want it to happen from the bottom. So does that make sense, Billy? Let me check your question again. So Billy said, "Hey Shawn, so that 10-minute strategy, price can just wick off a pivot anywhere in a zone and make a signal?" Yeah, I mean, basically you're just looking for a wick rejection off any side. No, that's never been a requirement, Billy. So it doesn't have to touch. I mean, the requirements are really simple. I feel like a lot of people overcomplicate it because I type the same requirements every day. So it never, like I've never said that it has to reject off the bottom or top of the zone. So like when I put the requirements here, guys, like literally follow them as I put them because I try to make it as simple as possible. But what you said, Billy, that's all right because a lot of people have that same question. So this is the K2 snipe strategy, US 30. 10-minute time frame. So first, just confirm a wick rejection off K2 pivot, right? Any pivot. It's really simple. So like when I say that, I really mean any pivot. It doesn't have to be the green pivot because this is another question I get sometimes too. It's like, does it have to be off the green pivot, yellow pivot, orange pivot, red pivot, any pivot really? So just keep it really simple. That's the first requirement. The second confirmation is confirm wick rejection off K2SR zone. So this has always been the requirement. If I wanted you guys to focus on like anything else, no, it's fine, Billy. It's not your problem because like this is a problem that a lot of people get confused with. And I just want to make it clear. So like when I say confirm wick rejection off K2SR zone, that means like anywhere within the zone. You just need to have the wick reject off it, like bounce off it. I'll show you an example of where it's not bouncing off it, right? So price wouldn't be bouncing off it right here, like this green one, because price is still within the zone. This would be a wick rejection off the zone. This wouldn't be. So these two right here wouldn't be rejecting off the off the zone right there. But this one over here would, right? And it's kind of clear because you can see that these bodies are still within the zone. And it's not necessarily pushing out of it. Vice versa, this one over here is actually pushing out of it. This red one, you can see that the wick is like, it's this clean push off it, right? So if you go down this list here, you can kind of just see, just by like eyeballing it, you can see this is a wick rejection off the zone, wick rejection off the zone, wick rejection off the zone. But this one isn't, because it's currently like still in the zone. This right here, when the whole body's in the zone, it's fine as long as it's, you know, pushing off. So like, let me see if I can find another one here. These are rejections off the zone right here. And I want to make sure, like, I'm just doing this to clear up confusion, because a lot of people were like looking at things a little differently and don't understand it completely. But it's really simple. Like, for example, here, these are rejecting off the zone. It's bouncing off. These are also rejecting off the zone, even though the bodies are within the zone. These are rejecting off, right? And you can see like there's a pattern there. You see price rejecting off and then it pushes off this way. Price is rejecting off right here and then it pushes off this way. Vice versa, these right here, you can see that they kind of push off, but they push back up. Like right here, it pushes down, but it's not a strong push down, right? It rejects off it, but then it comes right back up. And then same situation right here, it rejects off it, but it doesn't really push down until we get to this candle right here. So, I mean, this is something that comes with practice. Like I can see this easily because I look at this every single day. But yeah, like I mentioned, Billy, it's not a big deal. Like that's something that people just like, a lot of people don't see it because it's not so obvious to them because they don't look at this as often. But I'm looking at the same strategy like literally all day, every day. So this is like clockwork to me. It's like I look at it and I know if it's rejecting off or not. And that's why I decided to take the entry. But yeah, that's pretty much how you would look at it. Billy said me and Kyle were arguing about it. And he was wrong. Yeah, that's all good, Billy. It's a common question that a lot of people get confused with. So I'm glad I could clear that up for you. But yeah, these are the requirements here. Confirm wick rejection off the K2 pivot, which could be any pivot. Confirm the wick rejection off the K2 SR zone. And lastly, confirm wick rejection off K2 pivot does not touch candle body. So guys, just remember, like I make these requirements as simple as possible so that there's no confusion. So don't try to make it like more complicated than it really is, because in reality, it's really not that complicated. So yeah, right here, see this wacky movement over here? So like I was telling you guys, this was a risky buy right here, because if you guys took it, you probably hit stop loss, but look, it's back into profit, right? This is why I don't trade on Fridays, because the market's just too, it's just too messy. See it right here? It literally hit stop loss and then it came right back up. This is why I don't like trading on Fridays, because market is it's just super choppy. It's choppy and it's erratic. Like it can go up and it can go down super quickly. And situations like this will happen where it'll hit your stop loss and then it'll go straight up. Actually, you probably would have skipped this trade because like I mentioned, we usually don't take the first candle anyways. So this right here is the opening candle, 630. You probably would have skipped this one and then you probably would have actually just taken this one right here, this next green one over here. So if you guys are looking for a trade, you know, this is another one right here. But like I mentioned, I'm not taking any trades today, and I'm not going to like none of these ideas that I'm giving you guys are going to fall under the results for today. So just keep that in mind. If you guys are taking these are all at your risk trades, and I'm just, you know, I'm giving you guys an explanation as to how to use them and how to identify these entries. Because in reality, guys, it's not that difficult. But yeah, definitely glad I cleared that up for you, Billy. All right, let me see if there's anything else here real quick before we continue on. I just saw your message, Flynn. All right, so other than that, let me see if there's anything else for me to look at here. So I was looking at AUD/USD earlier. If you guys have any other questions, you know, feel free to reach out. If I see anything available to take, I'll tell you guys. Like I said, I'll give you guys trade ideas, but I'm not going to be trading this on my own. Because like I mentioned, Friday's never really been a good trading day for me. I mean, there's been a couple of Fridays where it's been good, but most of the time it just ends up being break even. Like I'll have one win in the beginning and then I'll take another trade and I'll lose. And I'm like, damn, like I'm back to where I started. Let's see. It's like someone's drawing on the chart. Let me turn off the annotation. There we go. All right, so I'm gonna draw these zones over here for the China 50. Some of you guys here are located in Singapore, and some are located like in some areas of China too, who are K2 members, and you guys trade this asset right here, the China 50. I don't trade it, but I've seen a couple of you guys trade it, and you guys made some pretty nice profit off this. I think specifically William. I've seen you, William, trade this a couple times, and you do pretty well off the China 50. So we'll see if there's any entries here that were available. Looks like there probably was. Let me see. Yeah, so this looks like the most recent entry would be this red candle right here. You can see it's rejecting off the pivot and the structure. So with that said, you would enter a long position right here, and it looks like it would have hit your TP already. So you guys can see that this strategy works for everything. It's not just US 30. It works for literally any indice, any Forex pair, any commodity like gold or silver, Bitcoin. It works for everything. Yeah, like Steven yesterday, or not yesterday, but I did see Steven made some, he made some profit. Sorry guys, I'm like looking at, I don't know why Clint has an issue with that. He said he tried looking at there. So let's see. Yeah, Steven, I think yesterday, or he applied it. So he made some pretty nice profits. Steven joined K2 like a couple days ago. He's been following K2 for a while. He finally saved up enough money to sign up to K2. So he signed up, started making profit like straight out the door. Like he's been killing it. And he's also been helping Josh with this 3-minute strategy. So like this over here, he applied it for Bitcoin. So he was applying it on Bitcoin right here on the 5-minute. And this dude is just hitting profits like back to back. So as you guys can see, this strategy works not just on US 30, but it works very well on everything else. Like he kind of ties it in with his own analysis, and he locked in a quick profit off Bitcoin. I think he's been doing that for a while now. So he's been doing pretty solid so far. And it's like, it hasn't been too difficult for him to pick this up. But yeah, I'm just showing you guys that, this generally works for everything. You don't have to use it just for US 30. Let's see. Neptune, are you back in? I just let everybody back into the room for whoever's trying to get into the Zoom. All right, so like that's the China 50. Here's a Spain 35. I know there's a lot of you guys here that are located in Spain as well. So if you guys are located in Spain and you guys want to, trade your own indice, you can. I mean, you don't have to trade your own world indice, but if you want to, I mean, it's available. And I didn't even know this was an indice until someone told me. So that's cool. But yeah, looking at this here, same situation for the Spain 35. If you guys wanted to apply my same strategy here, you can see obviously we have a rejection off the wick right here for this red candle. So if you took this trade over here, you would have had a full TP right there as well. So that's pretty much it for this here. Let me get through these questions real quick. So Paul said, I still want to understand how to draw the zones. So Paul, I'll show you how to draw the zones. It's not that difficult. Let's see. So I'm going to go over here to this clean chart. I'm going to take everything off the chart. All right, so I'll just show you, for example, here. So I'll go on a higher time frame so it's easier to see. So Paul, basically, in order to draw these zones, you just take everything off of your chart, you zoom out, you turn on your K2 SR version 2 indicator. And then when you have your zones right here, so you can see the zones are drawn up, right? They're plotted on the chart. You just click on this tool right here, which is geometric shapes. You go to rectangle tool, and then you'll just outline the zones. So right there, we have that zone right there. Next up, you have this zone right there. Next up, this zone right here. And it's really simple. You just outline the zones. Once you're done outlining, you turn off the indicator, and then you have your zones. So you draw that there. Again, right here, you draw this zone down here. And when these zones overlap, because you can see, for example, here, I drew the zone right here for this one, but you can see it's overlapping with this smaller zone right here. If that becomes the case, you can just overlap them and put them into one big zone. So we have that zone there, this zone right here, and then lastly, we have one last zone right down here. So with that said, you turn off your K2SR indicator, and once you have that set up, you have perfectly drawn zones on your chart, right? You zoom out, and there you go. You have market structure drawn out for you. You can see that price was consolidating here. It broke below, swung back up, went into consolidation right here, swung up, swung down, swung right back up, and then now, it's back into a consolidation within this area over here. So that's pretty much how you draw your zones, Paul. I'm not sure if there's more confusion, you can put another question there, and I can go more into detail. Or if there's something specific that you want me to draw zones for. So like if you have a pair that you like and you're still confused about it, just drop your pair, and then I can analyze it for you, and I can show you how to draw the zones. But it's the same situation. It doesn't matter if you're trading US 30. If you want to go to something else, like Bitcoin, it's the same process. If you zoom out from here, you turn on the K2SR, it's the same thing. You just go ahead and draw your zones over them. Like it doesn't matter. It works for everything. It's not just indices. It works for Forex, works for Bitcoin, it works for stocks, it works for commodities like gold and silver, it works for oil, it works for everything. It just, it doesn't matter like what you're trying to trade. Anything that you guys are trying to trade, my K2SR zones work for you guys. So if you need to draw market structure on anything, we looked yesterday and there was like COVID data. If you wanted to draw market structure for COVID data, you can do that too. I think there's like binary options that allows you to trade COVID data, which I think is kind of weird, but whatever, people try to find ways to make money off anything, the pandemic, death rates, all that stuff. But yeah, looking at Bitcoin right here, once you draw that up, you zoom out, and there's your market structure for Bitcoin. So it just really depends on what you're looking for. But yeah, if that, hopefully that answers your question, Paul. I'm not sure if you're still confused about it. If it is, then feel free to let me know, and then I can show you. But you're really not going to learn stuff from just watching. You have to go do it yourself. Like you're probably confused because you still haven't done it yet. But once you actually do it, you'll see how easy it is. It's not that difficult. So what I recommend is you go and try it yourself. And then if you're still confused, just reach out to me, and then we can, I can help you a little further. So other than that, let me see if there's anything else for us to look at here. Let me go back to the US 30 real quick to see if there's any scalps for you guys. Yeah, so if you guys took that scalp earlier that I was marking up for you guys, looks like it's now currently heavily in profit. So if you guys took that scalp right here, the one that I circled right here, it's on its way to full TP right now. Like I mentioned, I'm not taking any trades today. I'm just giving you guys trade ideas if you guys want them. But all these trades are going to be at your risk trades, and they're not going to be counted towards the K2 results at the end of the day. The reason for that is just, Friday is just a risky day to trade. It's not necessarily something that I want to risk, especially after having a good week so far. So it looks like it's about to hit TP. So I'll just put an alert there so that when it does hit TP, you guys will be alerted. All right, so we got an alert right there set. For you guys who are taking it, I don't know who's taking this trade. If you guys are taking it, congrats. Looks like you're about to hit full TP. But I'm not sure who else is, who necessarily is taking this. Let me check the premium to see if any of you guys took it. It looks like a couple of you guys are taking this right here. All right, other than that, let's see. All right, anyways, I have an alert set on that, so I'm gonna go through the other questions real quick as we continue. Let's see. Josh said 357 3-minute was a full TP. So let's look at the 3-minute real quick. Yeah, my chart's all fucked up. I was running different strategies yesterday, Josh. I was playing around with it. So let me go back to what Josh was just mentioning. I was running different strategies. I kind of figured out a new strategy as well for you guys. I haven't looked at it. Well, I haven't like really looked at it yet, but I was playing around with it yesterday. So let's see. Josh took the 3-minute strategy here at 357. So if you guys are familiar with Josh's strategy, it's really simple. So this is Josh's 3-minute US 30 strategy. First, you just confirm a K2 momentum signal, buy or sell. Second, or 2A, you confirm candle crosses K2 pivot 2, 3, or 4. And lastly, 2B, confirm, so it's an or actually, or confirm candle confirm signal in the direction above or below all K2 pivots. So his strategy is really simple as well. You're just looking for like two requirements. Like for example, here, you're looking for a K2 momentum signal. So right here, we have a bullish momentum signal. Second, you just confirm whether the candle crosses K2 pivot 2, 3, or 4. So the blue is 2, orange is 3, and the red is 4. So right here, you can see that it crosses all of the pivots right here, actually. And it's also a trend trade. So it falls under all three requirements. And technically, you only need 2 of these, but if it falls under all 3, it's a guarantee, not a guarantee, but it's almost for sure hit. So with that said, you enter after here, and your profit target is 25. Stop loss can be either 25 or 50, depending on your risk. So if you decide to take this trade here and you let it run, full TP in the next 3 minutes. So you can see it's a straight full TP right there with like literally no drawdown. It just shot right back up. So this is using Josh's 30-minute US 30 strategy. And that's pretty much what a lot of people have been, applying lately. Like again, same situation over here. This is following the one of the requirements. There's another one right here as well. So same thing over here. Let me just drag this down. Confirm a K2 momentum signal, right? Buy or sell. Confirm a candle crosses K2 pivot 2, 3, or 4. It doesn't cross any pivots here, right? So we skip that. We move on to the next requirement. Confirm signal in the direction above or below all K2 pivots. So like with that said right there, since this is above all the pivots, it's going to be a trend trade. So with that said, we enter a long position right here. Same situation, you enter either 25.25 or 25.50. And if you were to enter this trade over here and you let it run, full TP again right there, right? Super simple. I'll show you an example of a trade that we wouldn't take. So for example, over here, you wouldn't take this trade right here. So right here, first requirement, confirm a K2 momentum signal for a buy or a sell. Right here, we have a sell signal, right? Next, you want to confirm that candle crosses pivot 2, 3, or 4. It doesn't cross it here, right? Confirm that signal is in the direction above or below all pivots. Right here, it's a sell signal, but it's above the pivots. So there's no entry there. So we skip this right here. That's one that we don't take. Vice versa right here, same situation, right? We confirm a valid K2 signal, or not a valid signal, but just a K2 momentum signal for a buy right here. We confirm the candle crosses K2 pivot 2, 3, or 4. Right here, it crosses 2, and 3. So we don't need to go to the last requirement. So with that said, same situation in our long position right here. Profit target is 25, stop to be 25 or 50. Once you set that up, you let it run. And what do you know, full TP. So 3 back-to-back full TPs right there if you follow the directions properly. And that's Josh's strategy. So you guys can see I didn't even create the strategy. This is one that a K2 member created. Like Josh has been with me for almost a year now. So he understands K2. He understands what we do here, and he created his own strategy, which he decided to share with the rest of the people here. And, this is what it really is at K2. We're a community. Like if we find something that works, we share with each other. We don't hide, the strategy. we actually share everything, and then we all profit off it. You know, we don't get greedy here. There you go. That scalp on the 10-minute just hit full TP, guys. So if you guys took that scalp on the 10-minute, congrats to you guys, full TP off that. So that would be, yeah, this one right here, that 10-minute scalp. And these are two different strategies. Like for this one, this is a K2 snipe strategy. This is an actual K2 strategy where it, you know, rejects off these points. And this one is Josh's 3-minute strategy, which will probably be incorporated as a K2 strategy once we test it enough to figure out that, you know, we understand like when it works and when it doesn't, so that we can make sure that, you know, you guys have a good win rate. Because for all the K2 strategies, we have at least, it's got to be at least above like a 75% win rate overall. You know, I don't give you guys bad strategies. When we find something good, like this is a good strategy. It's just we need to fine tune it to make sure that it's above a certain amount of probability of winning. Because, you know, we trade one-on-one risk to reward, and the reason why we can do that is because we have a high win rate. You see people trade like 1 to 3, it's because they have like their win rate sucks. They lose like 20 trades and have like 2 trades just to break even. For us, we have like 10 wins and 1 loss, and we're net positive. So that's why we trade 1 to 1 here, because we have a high win rate. There's no right or wrong way to trade, but if you have a high win rate, you don't need to have a 1 to 3 or 1 to 5 risk to reward. You know, you can do a 1 to 1. It's perfectly fine because we win more than we lose. But yeah, other than that, let me see if there's anything else for us to look at. Let me check the chat before we continue on. So Shortstein's asking, what is your risk management rule, or something you can share with us? So Shortstein, I only risk about 1 to 3% per trade. In some instances, I risk even less. So it just, you know, it depends on what I'm trading. If I'm scalping, obviously risk is going to be higher. If I'm trading intraday or swing, risk is going to be lower because you're going to be taking those trades for a longer time. So like, for example, when I'm trading the scalps, right? So I'll show you, for example, either this or like even the daily entry. So like, I mean, not the daily entry, but this one right here. So for this, I'm risking 500 pips, right? My lot size for my 200K Ftmo account is like a 5 lot, right? So when you're trading a 5 lot, each pip is worth $5. You do 5 times 500 pips. I'm risking 2,500 per trade, right? This is my risk every time I take a scalp. So I'm either going to make 2,500 or I'm going to lose it, or I can, you know, close out early and make a little bit less than this. So in the situation right here, I have a $200,000 account. So 2,500 divided by 200,000. See, I'm only risking like 1.2%. I'm not really risking very much. So what I always recommend is that you risk 1 to 3%, because if you're only risking 1 to 3%, you know, it's going to be impossible for you to blow your account. You have to lose like, so for example, if you're risking 3%, so if you have 100%, right, that's your account, 100%. Or sorry, let me do 3 divided by 100. Sorry, the other way around. 100 divided by, so you have to lose 33.3 trades back to back, right? Like who loses that many trades? If you're doing a 1 to 5 risk to reward, you're probably gonna lose that many trades. So if you have a high win rate like us, we don't lose this often. Like if you look at any of our results, I don't think we've ever had a month where we lose 33 trades, even in total. So in order to blow your account, you have to lose 33.3 trades like back to back to back, like literally no wins in between that. So if you're using proper risk and you're only using 3%, it's going to be virtually impossible for you to blow your account. The problem with people is they over leverage. They don't understand risk and they don't necessarily use proper risk. So here's a little tool that we use, or that I've introduced to you guys, to identify proper, you know, your proper lot size. You can go over, this is something that David, another one of our traders here at K2, recommended to us. You can go to calculators.trade. If you go to this website right here, say you have an account balance of, like, say you have a small account, like $1,000, right? Like a very small account. And you're trying to risk 3%, and you're trading Euro USD, and your stop loss is like 50 pips. You just type in the numbers right there. You click calculate, and it tells you that you should be using a 0.06 lot size, right? That's your lot size there. And you're only risking $30. So for example, if you were to lose, like in order to blow this $1,000, you have to lose 33 trades back to back to back. Like you have no losses in between. But if that becomes the case for you losing that many trades, then you should probably change your strategy or figure out what you're doing wrong, because this isn't right. Like, you should not be losing 33 back-to-back trades. But yeah, I mean, that's pretty much how we would use that. Short Team's asking risk management for Ftmo. I mean, it doesn't matter if it's Ftmo or if it's your personal account, Short Team. Risk management doesn't change. Whether you're using whether you're using, you know, $1,000 personal account, 100K Ftmo account, you're still risking 1 to 3%. It doesn't make a difference. You know, if you're passing Ftmo, like if you're doing Ftmo, your goal to pass Ftmo is a 10% risk, a 10% gain, right? So if you do a 10% gain and you're only going for 1% each trade, you only need 10 wins to pass Ftmo. A lot of people think it's like this big number, but in reality, it's not. Like if you're trading, let's see, a 100K account, for example, if you're trading a 100K account over here, and then you need to make 1%. What's 1% of 100K, right? It's 1,000. So you only need to make 1,000 per trade. If you're doing 1%, or even if you're doing what I was saying, if you're doing a 2.5. So for example, if I'm doing a 5 lot for my 200K, if you're doing 100K, you're doing 2.5. So if you do 2.5 times 500, you're making 1,250 per trade, right? So with that said right there, that's still a 1.25% risk. It's not a big risk, Short Team. So it doesn't matter whether you're doing Ftmo, if you're doing a personal account, risk management doesn't change. You still risk 1 to 3%. You know, you're basing it off your account size. It doesn't matter if it's Ftmo, it doesn't matter if it's funding talent, it doesn't matter if it's your own money, your family's money, it doesn't matter. Risk management never changes. So, like, let me know if that makes sense to you. Because if it's still confusing to you, then I can go more into detail. Because you asked like risk management for Ftmo, that's like an irrelevant question, because it's the same thing whether it's Ftmo or your personal account. Like for example, if you're trading on Ftmo, right? So Ftmo, you have a 100K account. It doesn't make a difference. It's the same thing. Like if you had $1,000 or $100,000, you're risking 3%. Your stop loss is still 50. You click calculate, tells you take a 6 lot, right? So what happens was the decimal just moved over by 2. So before, if you had a $1,000 account, you're using a 0.06. If you have a $100,000 account, you're using a 6 lot, right? So it doesn't make a difference. It just depends on which, you know, your account size. It doesn't matter if you're trading with Ftmo. It doesn't matter if you're trading your own money. It's the same thing. You should still be using proper risk. So yeah, if that doesn't answer your question, Short Team, just let me know. And I want to make sure that you understand this, because I don't want you to blow accounts. Like I want to make sure that you're understanding this and that you're able to pass Ftmo. Because bro, like this isn't like, if you trade with us here, it's impossible for you not to pass Ftmo. It's literally impossible. Because if you look at everyone's profits here, like dude, Trail over here locks like 700. Like if you look at all the profits that everyone makes here, and if they're using proper risk, then it's like, yeah, like Joey just mentioned right here. He said, Joey said, I caught the last second of the risk management, 1.3% per trade of all positions at a single time. Sorry, let me see that. Joey said, I caught the last second of the risk management, 1.3% at a time, Joey. So, I mean, you shouldn't be over trading anyways. So, you know, you should have a understanding as to like how many trades you're taking anyways, because you're not going to take like 100 trades at once, right? So if you're only taking like 2 trades at once, then yeah, split your risk between a 1.5 for one and a 1.5 for the other, because you don't want to put all your eggs in one basket, right? You don't want to put 3% on one trade and then 1% on the other trade, and then one trade hits and then you make profit, and then the other trade that you took higher risk on lost, and then you end up in net negative. So that's, you know, that's the difference there between it. So definitely total, but you should definitely understand, you know, what you should be risking at a time. Yeah, you can't do per trade, Josh, because I mean, Joey, sorry, I'm going between, Joey, you can't do per trade because the problem is if you're taking, so say for example, if you're taking a 3% risk, right? And you're taking 5 trades times 5, you're already at a 15% risk. If you lose all those trades, you're going to lose 15% of your account. So that's why I mean, like if you're taking, you need 3% at a time. So if you're taking 3 trades, you just, you know, 3 divided by 3, that's 1. So you take a 1% risk per 3 trades. And that's how you control yourself from over trading. Because some people will take like 20 trades at once. Like they just take a whole bunch of small trades, and that's fine as long as you can as long as you can calculate the risk. Like for example, if you want to do 20 trades at once, you just do 3 divided by 20. Your lot size is going to be a 0.15, right? Instead of taking a full one lot each time. Or I mean, depending on your account size, but you know, that's exactly what I mean. You take 15% per trade risk instead of taking a full, you know, a full lot size. So that's, that would be how you would calculate it. And going back to short scenes, so short scenes I'm asking because Ftmo, we are allowed only 10 trades with 1% risk. Yeah, exactly. So you calculate the risk that way. Short scene, if you can only risk 10%, then you should be risking 1% or less, right? But it just depends on what you're trading. If you're trading something that has a high win rate, like you can see people here who pass they pass their Ftmo doing 3% because we have such a high win rate. So they just have like 3 trades that win or 4 trades that win, and then they pass Ftmo, right? It doesn't really make a difference as to you know, how much you're risking. It just depends on how you're trading. Like if you're trading something that has a high win rate, so for example, you need a 10% gain, right? This is how much you need. You need 10% to pass Ftmo challenge. So if you're taking a 3% risk, you divide that by 3, you only need 3 wins. So you take 3 of the K2 trades, 3.3. So say 4. You win 4 trades with K2 and you pass your Ftmo. That's how everyone's passing Ftmo with K2 because their win rate's so high. Like if you look at everyone's trades here, like Mondra over here, like straight wins, right? He's not taking I don't know what his account size is, but depending on what his account size is, if you use proper risk, like 3% per trade, and you have 2 wins already, like Angela over here, say for example, she was doing like a 10K Ftmo and she just needed 1K to pass, right? If that's the case, she's already almost done because she already has 2 wins right here. She just needs 1 more win or 2 more wins and she's passed her Ftmo. So just keep that in mind. You know, you base everything off risk. You could still risk 1 to 3%, or you can risk less than that. It just depends on what you're trading. If you're trying to take a lot of trades, then yeah, you're going to have to lower your risk. If you only want to take a few trades and just be done with it, then you can take a 3% risk. But that's why I don't recommend anything above a 3%, because this goes both ways. Like you can either win 3 trades or you can lose 3 trades. If that becomes the case, then you're going to blow your account, right? But like think of it from a real perspective, right? You're not going to risk 3% on a 200K account. It makes no sense. Like literally makes no sense. So for example, if you're trading a $200,000 account and you're risking 3%, you're going to risk 6,000 per trade. Like think about it realistically. Are you really going to risk that much? Probably not. So, you know, you just have to look at it from that perspective. This is such a big number. Like I'm sure that majority of people aren't going to be risking $6,000 for like 1 trade. That's why for Ftmo, you might want to risk something like 1% or even less than that. So like you have a $200,000 account, 1%, that's still 2,000. That's still a lot. So for example, if you want to risk less than that and you want to take like, you know, like 5 or 10 trades instead of just 3, then you can go to like 200,000. And then you can, instead of risking a 1%, you can risk, you know, times half of that. So like instead of a 1% risk, you're going to do a 1.05. So at this point, you're only making 1,000 per trade. This feels a lot safer, right? Because you need a 10,000 profit to win anyway. So instead of going for 3 trades to win, you can go for 10 trades. So that's the difference between, you know, calculating risk short scene. It doesn't matter like how you want to risk it. Obviously, if you're risking a smaller account, you'll want to go higher because you want to grow that account quickly. If you're doing Ftmo, you already have a big account. So your main goal is conserving capital and building onto that. So every time you make profit, it just keeps growing your account higher and higher. So it's just going to vary, you know, depends on your risk tolerance. Are you a risk taker? Are you a conservative trader? That's going to depend on how much risk you want to take. So generally you should take like 1 to 3% risk if you're trying to grow the account, because that's going to give you consistent growth, right? If you're risking that much. That's why for me, when I trade Ftmo, I trade around a 1.25% risk because I'm here to make money, right? I'm not here to mess around. Like I'm here to actually like make money from Ftmo. Cause like, for example here, so I have a 200K account. It's still in the challenge phase right now, guys. It's not passed yet because this is a new account. But I do have my 100K. So for example, I have my 100K account. That's the funded one. You know, if I'm doing 1.25% risk, see, I'm making like 1,250 per trade. So if I'm trading, so we take about maybe here, let's check the results from like last week. So from last week, how many trades did we take last week? We took, I'm just gonna get an estimate of how many trades per day. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 trades for the entire week. We'll probably say that's probably not normal for us. Maybe we'll do less than that. Maybe like 8 trades, right? 8 winning trades, or maybe 7 winning trades. We'll be conservative. So you're still making like 8,000 profit a week. If that becomes the case, times 4, that's like 35,000 a month, right? So, depending on your goals, if you're trying to make a lot of money, you just have to increase your risk. If you want to be conservative and make, a solid amount every month, then you just decrease your risk. But it's just going to vary depending on your preference. Because I'm not sure what you're looking for, short scene. If you're looking for big profit gains, if you're looking for conservative and you just want to have like normal profits every month, you can lower your risk. But it's always going to depend on you individually, because we don't know what you want to do with your profits, or we don't know what your goals are. My goal is to maximize as much profit as possible, but still be conservative. So I take careful trades, but I take a calculated risk per trade. So every time I lose, it's not a big deal. Like, for example, if I'm trying to, like I mentioned earlier, 10% is your max loss, right? Or your profit target. So if I'm only doing like 1.25, sorry, 10 times 1.25. What did I do? Oh, okay, so like basically I need like about less than 10 trades to basically reach that goal or like lose. So like, for example, if I'm doing 1.25% risk per trade, I have a 10% chance of losing the account or going to profit, right? So in order for me to blow my account, I need to have at least like 10 back-to-back losses. And if you guys look at our results here, we don't really have 10 back-to-back losses that ever happen. So that's where it gives me a comfortability where I'm not worried about my trades. Like, I can take a trade, let it run. And if I lose, it's fine, because I move on to the next one. Vice versa. If you're taking too big of a risk, you're going to be worried about your trades, because you might be one trade away from losing your account. So hopefully that helps, short scene. I'm not sure if it did, but that's just basic explanation for how to use risk, whether it be FTMO, whether it be your personal account, whether it be someone else's account. It just depends on your risk tolerance. If you're going for higher risk or if you're going for lower risk, you can adjust your lot size that way. All right, let's see. Looks like there was a signal here on the 3-minute. Yeah, nothing there right now. Looks like there's a pending sell, but I mean, it's above the pivot, so it doesn't look like it's going to be an entry anyways. Going back to US 30 over here on the 10-minute. Let's see if there's any zones here. Nothing there right now. So I'll see if there's anything else here for you guys to take. Yeah, it doesn't look like there's really much. Let me see the other. Yeah, definitely. No problem, Shorty. I'm glad I could help you. So right here, this is the daily entry for US 30. I'm not going to take it, but I mean, if you guys wanted to take it, it's technically running right now. So this would have been the daily entry for US 30. I especially don't like taking the daily entry on Fridays, because sometimes this will run into the next session. And if you guys are funded on Ftmo, you guys know that you can't hold trades into the weekend. So that's why I don't think I ever take the daily entry on Friday. Like, no matter how good it looks, I would just scalp in between it if I really wanted to. So yeah, this is pretty much it for this right here. This is going to be the daily entry for US 30. The scalps over here, this one's already done to hit full TP. So at this point, probably just be waiting for the next one. We would need a rejection off the pivot and structure on this area. Other than that, let's see, 3-minute, nothing there. Or I guess if this closes right here, this might be an entry for you, Josh, because it's crossing this blue K2 pivot right here. Here, let me scroll up real quick. Manifest asking what's the risk reward? It's 101. Let's see. Zephyr said, hi, Shawn. For 100K account, how do you recommend we CLO, our risk capital, to be able to concurrently take the daily trade, 10-minute trade and 3-minute trade. So Zephyr, if you're trying to take all of those trades, I would recommend that you risk about 1% or less, 1% or less. So it just depends on how many you plan on taking, right? Because if you're doing the 10-minute, if you're doing the daily trade, that's only once a day. So you can just, like, what you can do is you can like reverse calculate it. You can reverse calculate it where, so say if you want to take the daily entry, right, Zephyr? So like for example, you're taking the daily entry, that's 1% already, right? Then you think about how many 10-minute trades do you take a day? You know, you probably take like maybe 3. So you add 3 to there. And then you add up, how many 3-minute trades you want to take. So you're probably going to take like maybe 6 3-minute trades, right? You add that up, that's 10% risk. You're way overboard because you can only risk 5% per day. So keep in mind, Zephyr, when you're looking for, you know, how much risk to take during like per day, you got to remember that 5% risk is your daily max loss. So 10%, you're already way past it. So like, for example, if you're deciding to take like 10 trades a day, you're probably going to want to, you know, make your risk a little smaller. So instead of taking that, you might want to take less than half a percentage. So maybe like a third of a risk. So like instead of taking a 1%, you probably want to take like a 0.03%. Because like, for example, here, if you're doing a 0.03% times 10 trades, you're technically only risking 3%. So you want to be well below that 5% risk for your account, Zephyr. So if you're doing 100K, let me think. I'm trying to think, what would you be? So 100,000 times 0.03. And this is going to vary because, you know, not every day you're going to take 10 trades. You might want to take less than that. So this is just going to be a flat line of like what you should be looking at. Oops, wrong number there. Let's see, 100,000 divided by 0.03. So if that becomes the case, Zephyr, then you should only be risking 300 per trade, like $300 in total. So for example, if you wanted to take the scalp entry, you know, depending on where your stop loss is, you just got to calculate, like whenever you go into a trade, you want to understand what your risk is. Like you want to know exactly how much money you're risking when you go into a trade. Your max risk, if you decide to take 10 trades a day, you only want to risk $300, right? If you're going to take less trades, then maybe you can increase that to maybe 400 or $500 per trade. But you know, like I was mentioning, it just really depends on what you're aiming for. Because like, for example, if you're taking a 3 lot, 3 lots too high, a 1 lot. Yeah, if you're taking like a 1 lot, so 1 lot times 500 for the scalps, you're risking 500 per that trade already, right? So instead of taking that, if you want to take like 10 trades, you might want to take a smaller lot. Instead of a 1 lot, maybe take a 0.08 lot, a 0.8 lot, right? 0.8 times 500, then you're only risking 400. You know, vice versa. If you want to risk less than that, like I mentioned in the beginning, 300, then maybe you want to take a 0.7 lot. Multiply that by 500, you're only risking like 350. So this is going to be more within your range. So just depending on how you want to trade it, you know, 500. So here's like the easy calculation for it, right? This is how you would calculate risk on calculating risk on Ftmo for K2 scalp 500 pip stop loss. So like, for example, here, if you're trying to calculate your risk on Ftmo, this is for Ftmo specifically, like a 0.01, and this is for US 30, because every asset is different. So I can't give you an explanation for everything because, you know, it's just going to take all day, but I'll show you what it is for US 30 because this is what we normally trade. So like, for example, here, you know, you would have a you would have a 1.0. If you take a 1.0 standard lot, it's going to equal $1 per pip, right? So for example, if our stop loss is 500 pip stop loss, and then you're taking a 1.0 standard lot, that's going to be 500 times 1, right? And it's going to equal 500 risk. You kind of get what I'm saying, Zephyr? So like, for example, calculating risk on Ftmo for US 30 K2 scalp 500 pip stop loss. If you're taking a standard lot, you're going to be doing $1 per pip. A 500 pip stop loss, with a 1 standard lot, you're going to do 500 times 1. You're going to be risking 500 there. Vice versa, if you're risking less than that. So I'll show you that. That's the standard lot there, and then even a smaller 0.50 standard lot, it's just going to be 50 cents a pip. It's like the same thing. You just calculate it differently. So for example, right here, or let me just move this down. So that's going to be that right there. This right here, it's the same thing. It's you just calculate it differently. So 0.50 standard lots. It's just going to be 500 times 50 cents instead, and that's going to equal 250 risk. So this is pretty much how you would calculate it to depend. Like this is going to be for the 500 pip scalp for the stop loss, and then the difference is if you're doing the daily entry, that's going to be 1500 pips, right? It's going to be a bigger stop loss. So you got to calculate it a little differently for that. So for example, if you're doing this is going to be it for this one, but like for example, if you wanted to do this, let's move this over here. If you want to do the same thing, calculating risk on Ftmo for US 30 K2 daily 1500 pip stop loss, this is going to be way different because you're just multiplying this by 3 at that point, right? So it's the same situation. 1 standard lot equals $1 per pip. $1 per pip. 1500 pip stop loss, standard lot. This will be 1500 times 1. 1500 times 1 equals 1,500 risk, right? So it depends on your stop loss. Like you're going to base all of your risk off your stop loss. So if you're doing a 500 pip stop loss and you're doing a standard lot, it's going to be 500 risk. If you're doing a 1500 pip stop loss, same lot size 1.00, then this is going to be a 1500 pip risk. So this is how you would differentiate it. It's not really that difficult. You just change the numbers, whether it be a bigger stop loss, and it doesn't really matter. Like if you change it, like for example, if you wanted to do like some random TP or stop loss here, let me just move this over here. So again, right here, same situation. Let me just copy this over here. All right, so same situation over here. Calculating risk for it, and then say your stop loss is different. Say your stop loss is 250 because you're doing the 3-minute strategy at this point, right? So same thing here. You just change the numbers. You just plug and play. Same numbers there. 250, and then your risk over here becomes 250 instead because your stop loss is tighter, right? So this is the main difference between the three. So if you're applying the daily entry right here, this is what the risk looks like. And then you just change the numbers. If you're doing 500 pip stop loss, the numbers just change slightly. Same with the 250. They just change slightly. It's not really that difficult. It's a basic math equation. You're just multiplying your stop loss versus your lot size. And then that's how you determine your risk. So that's pretty much how much you would be taking. So Short Team's asking, on average, how many trades on US 30 scalp in a week with us on the morning live stream? It would depend, Short Team. So it depends if it's a heavy news week or if it's a smooth news week. like last week was pretty smooth. So we had 10 trades last week. Generally, it's going to be between maybe 5 and 10. We usually have at least one a day. So it's going to be between maybe we'll be conservative with it. It'll be around like 4 to 10 trades a week. So that, having that number in mind, you can determine how much risk you want to take. If you want to do 1%, you can do 1%, or yeah, you can do 1% because then that'll just be within the 10% for the week, or you can do less than that, like half a percentage. It's just really up to like how you want to do it. But yeah, so I mean, I think that's about it for this here. Let's see, Spooky wants me to take a look at gold. So I think I'm done with these questions right here. Hopefully that answered your question, Zephyr. If it doesn't answer your question, let me know what else you're still confused with, and I'll go over that more in detail, catered to what you're actually asking for specifically. Because I do see your other question there about the 1.25 risk. But like I mentioned, it just depends on, your risk tolerance is going to depend on you and on what strategy you plan on applying. So other than that, let me scroll down real quick. Yeah, so Spooky wants me to take a look at, let me just scroll up real quick. Jasmine's asking, have you ever tried using your strategy on the 3-minute? So I personally haven't, but I'm sure it works. I mean, we can take a look at it right now. Or actually, let me look at gold real quick for Spooky, because his is a little more time sensitive. So let me pull up gold for you guys real quick. So here's gold. I'm gonna delete everything off the chart. I'm gonna zoom out. And like I mentioned, first thing I'm gonna do is I'm going to identify market structure. So I turn on the K2SR version 2 indicator right here. I draw my my structures for you guys right here. All right, so we got market structure right there, right there. There, right here, right here, and lastly down here. All right, perfect. So once we have all this market structure drawn up, let's turn this off and zoom out, and there we go. We have some perfectly drawn market structure. So it looks like price broke into this structure at about February 26th. I'm just gonna mark that up right there so I know where to cut off where I'm looking. So right here, this is all that's important to me, this area right here. Because price is way up there. This is market structure for today. So we don't care what happened like a month ago. We just want to know what's happening right now. So right here from this point, I'm going to turn on the momentum indicator to identify my bias. So for example, right here, we have a pending buy signal right here. But obviously price has just been going sideways for a long time now. So we have a rejection from this point. We have the buy signal right here. I'm going to turn off the momentum indicator. But I mean, looking at this here, like gold has literally just been consolidating. So right here, price has literally just been going sideways. If you guys have been following my analysis for gold like this entire week, Spooky, we have a bullish bias here. But if you guys have been following, like literally, I think the last time I analyzed it for you, Spooky, was like on the 24th right here, right? I was mentioning that price needs to either break above here or break below here for it to have any actual movement, right? Because it's literally just like gold is in a squeeze right now. It's getting squeezed. If you like, we're just focusing on these two lines right here, like here, I'll temporarily delete these. So if you delete these right here, so I'll go smaller and smaller. So for example, right here, you can see that this squeeze was bigger, right? The squeeze from the 17th was like up here to down here. Now the squeeze is just getting tighter and tighter. So now the squeeze is only between these two lines right here. So at this point, you probably would want price. We have a bullish bias right here because if this candle closes with a bullish signal, then we want it to close above this area right here. So if it closes above this area, then it's probably going to shoot even higher. And that's why market structure is important, because if you guys didn't have market structure here, you wouldn't be able to identify this as a squeeze, right? Because you wouldn't know that. You'd think that, oh, this is probably the range up here. Like if you didn't have these middle zones, you would think that price was ranging, within this area right here, which it is ranging within this area. But the thing is, since we have this middle zone right here, you can see that we have a more important squeeze. We can take this off, and the squeeze is actually right here because it just gets smaller and smaller, right? It's like a little cone. it's getting tighter and tighter, which means it's preparing for a breakout, right? So that's why I wouldn't mess with gold. I mean, you can mess with gold if you want, but I'm expecting by next week a breakout up or a breakout down, because it's getting squeezed. Once it gets squeezed tight enough, it breaks, right? It blows up. So like, for example, here, if I just draw some trend lines, you can see that the squeeze is starting to build, right? So, you know, this gives you an even better picture of like what I'm looking at here. So if I take these off, now look at that squeeze, right? We want price, like price is gonna have to break out of the squeeze, and it's gonna break out above here or break out below here. Like I don't trade patterns at all, but you guys can see if you have proper market structure, you guys can really see what's going on in the market. A lot of people don't know how to draw proper market structure, and that's why I created this indicator to help you guys, because I can do this without the indicators. Obviously, I created the indicators, but in order to show you guys, you know, how to see this, what I'm looking at, that's why I created my indicator to, you know, develop that algorithm to pretty much plot the zones for you guys. So this is basically what I see happening for gold right here. I mean, it's been consolidating since I analyze gold for you guys like almost every day, and you know, like I mentioned right here, we have a momentum signal for a buy. So what I'd be looking for is possibly, if this closes, we'll have a bullish bias because it's a buy signal. So I want it to close above here. And then once it closes above here, I mean, it might not even close right here. It might just break out upwards up to here. You know, who knows? But we'll have to see. The reason for this is because I see the dollar being weak. You know, with the stimulus coming out, you look at the DXY over here, this thing is overextended. This is probably gonna dump. If this dumps right here, then you can expect gold to shoot up. However, if this ends up shooting up higher, then you could expect gold to dump, right? But who knows? Like, we don't know what's gonna happen tomorrow. Like, we don't know what Biden's gonna say over the weekend, especially with the COVID stuff going on. Like, we really don't know. I think on April 15th, they're giving like everyone in the US like the COVID vaccine. So that's probably gonna push price, like the dollar index up. Well, that's probably why this pushed up. I don't know if you guys followed the news yesterday, but I know there was news yesterday about the, let me see if I can find it. COVID vaccine. Oh, it's just California. Okay, my bad. I thought it was everybody. So yeah, so in California, the vaccine is going to be open to everyone 16 older on April 15th. So I'm pretty sure the other states are going to follow along with this. It's not just going to be California. So like with that said, if this ends up, you know, becoming the case, then you're probably going to see the US dollar continue to push up. You know, there's other fundamentals that come into play, and it's going to affect the gold as well. So depending on what happens there, it can either benefit the dollar or weaken the dollar. If it benefits the dollar, then you can expect gold to come down. Vice versa, if it hurts the dollar and this drops, then you can expect gold to go up, because these move opposite of each other, right? If gold is going up, then, you know, gold is going down. If the dollar is going down, then gold is going up. So just use that as, you know, your confirmation for confluence, and that's how you would determine, you know, what direction to be trading it in. I mean, there's other confirmations you guys can use, but the main thing, first things first, always look at market structure, and then identify, you know, your trade ideas. And then from there, you can look at other confirmations. You can look at the dollar index, you can look at patterns, you can look at anything from that point. But main thing always is going to be looking at market structure, because price generally respects market structure, right? If you zoom out from this point, you can see I drew this market structure today, but you can see that it's been testing it, like it's been respecting it all throughout the year. Like ever since January 7th right here, it broke into market structure, and it's been respecting it. It goes sideways, comes down, goes sideways, comes down, goes sideways, comes down. And it's literally been going sideways since February 26th. So if you guys have the K2 indicators, you know, this definitely is a game changer for you if you're not able to identify market structure on your own. And like by doing this is going to train your eye to see things. So like for example, now that you see the market structure there, if you turn this off, you can kind of see where you drew those zones, right? You drew a zone up here, drew a zone down here, right here, right here, right here, right here, and around this area right here. If I turn this back on, what do you know? Same thing, right here, right here, right here, right here, right here, and around this area as well. So, you know, these tools are meant as like training wheels for you guys. It's to train you guys, or just to train your eye to see what you're supposed to see. And then once you get good, you don't even need the indicators anymore. So, if you're having trouble drawing market structure and identifying momentum and stuff like that, this is probably going to be your golden ticket to actually getting this trading thing down. But like I mentioned, you don't need it. I mean, it's going to make things a whole lot more efficient, but you don't necessarily need it all the time. Clint's asking, Shawn, why are your zones not market out? Sorry, Sloan, I'm not sure what you're referring to. All right, so I'm done with this right here. All right, so other than that, let me see what else we got over here. So I'm done with gold. Let me scroll over to the other question over here. Let me scroll down real quick. Let's see. But yeah, Spooky, like Spooky's question was, is gold retesting before continuation? So, I mean, yeah, I think it's retesting, but like I mentioned, we have to wait and see how it plays out because a lot of stuff can happen over the weekend. I personally wouldn't hold gold over the weekend because, I mean, who knows what will happen over the weekend? They'll push price, one way or the other. All right, let me scroll down real quick. All right, next question is from Ryan. So Ryan's asking, do you think you can have a look at GJ? Yeah, definitely, bro. So let's pull up GJ for you. So I'll pull up GJ right here. Same situation. Take everything off the chart. Zoom out. First thing I'm going to do is I'm going to identify market structure. So I'm going to go ahead and turn on the K²SR indicator. So we have market structure down here. It's irrelevant because price is so high up, but I'm going to draw it for you guys anyways, just so that we can have an understanding of where price was moving a couple months from now in January. But it's had a pretty strong bullish run since January. So this is January or December actually, up until today. This thing pushed up like pretty heavily. All right. So we got that set up. This market structure. Okay, so this is the actual important market structure. This is where price currently is. So this is what we would actually be focusing on here. All right, so looking at this here, I'm going to turn the K²SR off. And as you can see, price generally respects market structure. So currently price is, I guess this would be of importance, this whole area right here. So I'll just draw a vertical line right here. So this is all that we really want to focus on, this area above here. So once we can see, what market structure we're referring to or what we're focused on, we can see that it's bullish, right? I can tell it's bullish just by looking at it. But if you guys need help, you turn on the momentum indicator and it's bullish because the momentum started down here, right? So as you guys can see, I created all these indicators myself. So I already know what I'm looking for. I don't need the indicators, but if you guys need the help, you just turn that on. It's like a cheat code, basically. You're like, oh, where's price going? You turn this on, it's bullish. Where's price going over here? We have a sell signal, so it's bearish. But if you turn that off, you kind of see where price is moving. So for example, right here, we have a bullish bias for this right here, Ryan. So basically, we're looking for buys only right here. Generally, when you see price break and close past a structure like this with a buy signal, so because we have a buy signal right there, this is what we'd be looking for: rejection, buy signal, break and close past structure. And what do you expect to happen from here? I expect price to go up and test this structure right here because it's the same pattern that played out down here, right? We had a rejection from this point. We had a buy signal right here. As soon as price broke and closed past structure, it did retest the structure right here. But what happened after that? It pushed up to this next structure above here, right? So from this point right here, overall, I think price is going to push up to this structure. However, price can easily come back down, retest before shooting back up. But we obviously have a bullish bias right here for GJ. So I'm not sure if you're in a buy or a sell, Ryan, but this is basically what I see happening here. It's either going to shoot up all the way or it's going to retest and shoot up. Another way to compare this for a confirmation is you can look at the index. So I'll pull up the indexes right here, and then you can just pull up the pound index versus the pound index versus the Japanese yen, since these are the two currencies right here. So we have the pound index open right here. We'll open the Japanese yen index right here, the JXY. And looking at this here, this is pretty clear, right? Just looking at this from a bird's eye view, you can see that the pound is bullish, and you can see that the Japanese yen is bearish, right? So with that said, that's going to indicate that the pound is stronger than the yen. So looking at this here, when price is going up, like it is right here, that means that the first currency is stronger than the second currency. Vice versa, if price is going down, that indicates that the second currency is stronger than the first currency. So for example, here, we're looking for a buy, and looking at the indexes here, the pound is stronger than the yen, right? So that's going to confirm our move here. So since we're bullish here, we're going to feel better about this bullish move here because the pound is stronger than the yen. So those are two confluences right there indicating that price is probably going to continue up. So that's why for GJ right here, if you were looking for a buy, this would have been the entry right here once that candle closed. And then if I was taking this trade, I would have wrote it to this next structure above here. I'd probably put my TP slightly below it because, you know, sometimes price will get close to the structure and then it'll just reverse back. And also to cover the spread. So my spread here is about 5 pips. You want to make sure that you leave some space there so that you get out, you don't get caught in that spread. So for example, if your spread is 5 pips, you just want to make sure that you have at least maybe 6 or 7 pips here. It's about 9 pips from the TP, so that you get pulled out of the trade and you hit your TP, and you don't get caught because of the spread, because that happens a lot. Some people don't realize that there's a spread there. So this is what happens sometimes. People have their TP right here. Price will get literally to exactly at that point, and then it'll reverse down, right? And then people get mad. They're like, oh, why didn't my broker close me out? And it's because of the spread. You have to factor in the spread into your TP. So instead of having 80 pips right there, I'll usually like drop it down like 70, so it doesn't, I don't get caught in that little problem. Because sometimes the broker will screw you guys. Like price will get close to your TP and they'll change the spread. It'll go from like 4 pips to like 8 pips. And if that becomes the case, you're going to get trapped in this trade and it's time to close you out. So just keep that in mind when you guys set your TP stop loss. Always incorporate the spread, because that's how the brokers get you. And a lot of people don't understand that. But yeah, that's it for GJ right there. Let me see what else we have next. So Zephyr said, sorry for getting you to go through the basics. I was clear on that. I think my question didn't get across correctly. But from what I'm gathering, using a 1.25% risk, 1,250 risk at any time, all 3 trades running, and assuming one trade on each of 3 strategies running at one time, risk of 1,500, 50, respectively. Each trade has equal probability of winning and same to hit TP. Then all my allocation will be around 0.79 lots across all strategies, which at the above risk will yield stop loss of 1,190, 39.69, and 9.84 respectively, summing up to a total of around. But I think that the 3-minute trade and 5-minute trades has more turnaround. You use 3 trades a day and 6 trades a day. I should give more lot size to these strategies instead. Am I mistaken? 100% Zephyr. So yes, you should be using a bigger lot size for the scalps because they're a smaller move and your stop loss is going to be smaller. So like going back to what I was saying earlier, like going back to what well, it's going to be really confused because yours is like really detailed, but you're definitely correct on that, Zephyr. Because I know if I go over it here, it's going to confuse a lot of people because you have like your thing is very, very detailed with your analysis for what you're trying to cover. So yes, that's correct. Since the main difference between you using a bigger lot size for the scalps is because they're more often, and also because they have a smaller stop loss, right? So like the daily entry is 1,500. That's a big stop loss compared to the 500 stop loss we use for our scalps here. So like I wouldn't necessarily, this goes into like more detail too, because so say for example, Zephyr, you have like 2 wins, right? You have 2 wins for your scalps. Then at that point, your risk goes higher because you can take bigger lot sizes because your account's now bigger. Like your account goes from 100,000 to like now 101,000 or 105,000. So if you want to change your lot sizes, you can along the way, but I would probably just do it by week, like by the week. So because if you already have a big account, if you're doing 100K with Ftmo, you can just stick with the same lot sizes, and then if you do really good that week, you can increase it the following week. That's kind of how I was able to. That's how I was able to scale my position sizes. Because if you guys remember, before I was only taking a one lot, right? So I went from a one lot to now I'm using a 2.5 because my account size is bigger. So like by week, you can just increase your lot sizes a little higher and higher depending on on your account size and depending on what you're trading. But yeah, you're definitely on point, Zephyr. You should definitely give more lot size to the scalps versus the daily. And for me personally, I only take a small lot size on the daily anyways. I take a small one and then I just scalp within it because I take the 5-minute, 3-minute scalps within the daily, which is, a way bigger move. So you're definitely on point with it for the most part. All right, cool. So let's see. Sam said, say my account is not big enough for US 30. Is it okay to trade SPX when you find an opportunity on US 30? No, I never recommend that, Sam, because they're not always going to move the same. Last week, they weren't moving. Last week, they weren't really moving the same direction. So like I could put them side by side. They move the same way a lot of the times, but not every time. So if you want to trade S&P, just learn the S&P strategy. I mean, just learn the same strategy, but for S&P. So if I put US 30 next to S&P right here, see, most of the time they do move the same way, but they don't always move the same way. Like for example, if we're trading on the 10-minute, that's usually where we scalp. Here, let me see this 10-minute. So Sam, if you were to copy every single trade, well, first of all, you're not going to even know what the TP stop loss is going to be because the TP stop loss is going to be different. But looking at this here, you can see that, like for example, I think it was yesterday. So this move right here, this dropped heavier for S&P than it did for US 30, right? It dropped up to here and then it bounced all the way back up and then it came back down. So you can see right here, there's like clear differences between S&P and US 30. So for example, right here, this is a smaller drop, right? This is a way bigger drop right here. See, like if you were to take a buy here, say if we took a buy right here and you took the buy here, you probably would have still lost because it kept going down further. Vice versa over here on US 30, this right here dropped a little bit, right? If you were to take a sell here and we were taking a sell, you would have lost because it went straight up over here for S&P. So if you're going to trade one asset, learn how to trade that asset. Don't go in between and like just copy a trade for S&P if we take a trade on US 30, because they're not, most of the time they do move the same, but it doesn't happen all the time. So I would never recommend that you copy a trade for S&P that we're taking on US 30. If you want to trade S&P, just learn the strategy on S&P. It's the same strategy. And people here trade S&P as well. It's just, you're going to take on a lot more risk if you do that because they're not always going to move the same. So yeah, short answer to your question is no, I wouldn't recommend that you copy the trades like that. If you're on the higher time frame, it's different, right? So like right here, if you're trading on the 1 hour, it's not going to make a big difference because they move similarly over time. But if you're scalping, like for example, if you're trading on the 3-minute, like this doesn't line up at all, right? Because they still move differently, even though you think they move the same. Like for example, right here, this comes down like for a long time. This only comes down slightly, and then it shoots all the way back up. So just keep that in mind, Sam. I just don't want you to be blowing accounts trying to copy the same trades on both sides. But I do see a lot of people do that. So that's the main difference if you're trading on the higher time frame versus the lower time frame. All right. So anything else? Let me see if there's anything else here. Definitely no problem, Sam. Glad I could help. Let's see. Zephyr said, so maybe rephrase my question. If you have to take the daily 3-minute trade, 10-minute trade now, what lot size would you give it? If you have 100K, So, I mean, you just have to do the math for it. So like, for example, if you're doing 100K, here, let me see if I can break it down for you. Zephyr, because you should still be using proper lot size, but this is something that you kind of have to calculate on your own. So let's see, we have, so Zephyr is trying to use 1.25% risk. I'll try to figure this out. It's just gonna be a little complicated because there's a lot of different factors that go into this. So if you're taking this 1.25 risk total on 100K account, right? So if you're going to be taking this trade here, three active trades. So first trade, so number one is daily US 30. Hip risk. Two is going to be, so K2 daily US 30, K2 5-minute scalp or US 30 snipe, 5-minute, and then lastly, K2 US 30, this is gonna be Josh, US 30, 3-minute scalp, 500 hip risk, hip risk. All right, let's see what we can do here. All right, so total, let me pull up the calculator real quick. So your total risk for 100K is going to be 1.25, 250. That's trades, 1250 total risk. So 3 active trades, 1250 total risk. Let's move this over. Active trades, 1250 total risk. So if you're doing this right here, 1500. So, I mean, if you're trying to do 1.25, so let's do 1.25. See, this is where it gets kind of tricky because these are going to be different lot sizes. So we'll do it by 500. So 500, that's 2, that's 3, 5, divided by 5. So you should be using a, I'm just going to put this note down here. Note, if you're doing 1.25, you should be using a 0.25. So this is what I mean where it gets a little complicated, Zephyr, because you have to actually do the math equation for this. Like now you figured out, I already figured out this is how much risk you should be using per 500 pips. So for example, right here, so we'll just do the 500 pip risk first. So for example, you have a 100K account. You multiply that by 0.025. You're only risking 250 per account here. Max risk. Max risk 250 per 500 pips, right? So if you're taking this scalp right here, I'm trying to figure out the, I'm not really good at math, guys. So like, if you guys see anything where this needs a correction, let me know. This is why I became a lawyer, because I don't do math, but I'm going to try to help you here, Zephyr, if I can. So let's see. So 250, your max risk is going to be, all right, we'll just do it this way. So for here, you can only risk, only risk 250. I mean, I could probably go as far as I can with this calculation, Zephyr, but this is like, I'm not good with math, so like I don't know if I'm gonna even add this up right. So this is 500 right here, and then 250. Let me just move this up right here. So I'm gonna try to help you as much as I possibly can, but I might go off a little bit because I'm not sure exactly what the risk would be. Can only risk. So I can do this. The number thing is fine. The hard part is going to be identifying your lot size, because that's what you're looking for, right? You want to know what lot size you should be using, but you get the gist of this, right? So your total risk is 1,250. Then for your if you're taking the first daily position, you can only risk that much, and then for these you're gonna be risking this much. Wait, sorry, this is like, I'm really confused now, Zephyr, because the thing is these should be even risk. So let me because you're gonna have to split the risk amongst all of them. So your lot size is gonna change between all of these. So let's see. All right, I think this would be easier because I'm like hell throwing myself off right now. I think I did the calculation wrong. So basically, this is an easier way. 1,250 divided by 3, because you're taking 3 trades, right? So here, now your risk is going to be 416 across all trades. 416 risk across all trades. All right, so for yours down here, since this is a 500 pip risk, now I just got to figure out, let's see, because if you do one, yeah, if you do a standard lot times 250, no, standard lot times 500, it's gonna be 500. So 250. Yeah, but you get what I'm saying, right, Zephyr? You're probably a lot better with math than I am, because you like formulated that whole analysis earlier. But yeah, basically this is what you would be doing. So you want to spread the risk 416 for each trade here. So you want to make sure that there's only for this one, you have max risk 416. And then same for this max risk 416. And obviously your lot size is going to vary because each trade is going to be worth more, because your stop loss is going to be different. Like your stop loss for this one is going to be 1,500 and this is 500. So for your snipes, or both of your scalps, it's fine. You can use the same thing for these. You can use the same lot size for both the 5-minute and the 3-minute, because your stop loss is going to be the same. The main thing that's going to be confusing, like for me especially, is going to be the 1,500 pip, because you're going to have to allocate the risk between that as well. So like, for example, down here, let me see, if you were to do this, let's see, 416 divided by 500. Okay, so your lot size is going to be 0.83. There you go. See, it wasn't that difficult. It was just, I just didn't know what the hell I was doing. So lot size 0.83. There you go. So now you kind of get it, right? It's not really that difficult. So your lot size for that, and then lastly, your other one here is going to be so yeah. So just this is as far as I'll go, and no problems. I forgot I could help you, but yeah, for this right here, this would be your max lot size for these two would be 0.83 for the scalp, since it's a 500 pip risk. And then you just need to calculate the risk for the 1,500, because that's the one that's going to be different since it's higher. It's a bigger stop loss. So yeah, hopefully that helps, Zephyr. Try to help you as far as I can, but sorry, my math is horrible. So it's going to be hard for me to calculate this right here, the first one. All right, perfect, no problem. All right, so let's see if there's any other trades here that are available. Let's see. Josh said, oh man, we missed it. Damn. So Josh had an entry right here using this. Yeah, so using Josh's strategy right here, there was an entry right here. for this one. Reason for this is that we have a momentum signal, the sell signal right here. We want to confirm that the candle crosses K2 pivot 2, 3, or 4. So it actually crosses all the pivots here. So from this point, this would be a short position right there. Stop loss TP is 25.50. If you were to take this trade straight to TP on that next candle. So nice work, guys. So if you guys took Josh's strategy all morning today, it looks like they're all wins. Like literally all wins this morning. Nice. So yeah, nice work, Josh. Off that, let me check the chat. So I think nice. Yeah. So if you guys are in the premium here, Josh actually called that trade right here, or he marked it up at least. So he showed that one right there. So you guys can see here, if you guys are in the premium, you guys can see that everyone is always like the premium is always going off and everyone's helping each other. Like Josh over here gives his analysis for everything over here as well. Oh, I see. Yeah. So unfortunately, Josh didn't take the trade, he said. Other than that, yeah, it looks like you guys are just sharing all the profits right here, or you're sharing your trades. So if you guys are in the premium, you guys will see what everyone's covering here. But we're always like the chat's always active, and we're always looking at different strategies and figuring out what else we can take. So yeah, so that's it for that one right there. Unfortunately, I didn't take it. Josh didn't take it either. But for you guys who did take it, congrats, because it dropped pretty nice right there. Other than that, guys, yeah, if you guys have any other questions, feel free to put them in the chat. Like I was mentioning, this is I just saw Aaron over here. Where's Aaron? You still in here? Oh no, Aaron left. I just saw your message right now in the Zoom. But yeah, guys, if you guys have any other questions, feel free to ask. This is more of a Q&A session for us today because it is Friday, and I don't necessarily trade that much I don't trade at all on Friday because of the market conditions. It's super choppy, prices all over the place. So if you guys have any specific questions, feel free to put them in the chat, and then I can analyze anything for you guys. Or if you guys have any questions about risk management, Ftmo, anything like that, I can answer any questions for you guys. I'm here to help you guys out. It's just, I can't answer the questions unless you guys ask, because, I have a lot of answers. It's just, if you guys have the questions, I can answer them. But other than that, I think that's it for now. Let me see if there's anything else here. But yeah, if we don't get any questions soon, I'm probably going to sign off early because, we don't have any trades to take. But I will definitely, let's see, Peter said, how long will US 30 go? Keep melting. I wonder, huh? I was thinking about that too. So like I was looking at this and I was wondering if this is going to swing down. So if it does swing down, it's cool because we have zones down here. So I'll probably just draw these zones right here, Peter. So like when price does come down, we'll be ready to catch these scalps when they do happen. And this is what's cool about Josh's like 3-minute strategy, because sometimes we get bored, right? So when you get bored here on the 5-minute, on the 10-minute, we can just knock down to the 3-minute and start whacking away at Josh's 3-minute entries. So yeah, let's see. There goes another signal for you, Josh. Buy signal, but it doesn't look like it's going to be an entry since it's still, it's like way below the pivots. Let's see. I think some of you guys sent me some profits. Let me see what's going on over here. Nice. Steven sent me his profits. So Steven's been doing pretty good. Congrats to you, Steven, because we talked yesterday and like, you're confident about your trades, but you did take a scalp right there for US 30 for the buy. You made 42 bucks. So congrats to you, Steven. Also yesterday, he was in this trade here for a sell and you made 58.48. So nice work, Steven. You've been pretty on point with your consistency. I know in the beginning you had some trouble, with your consistency and following the trades properly, but it looks like you got it down. You know, it seems like ever since you stopped using that copier, you've been doing great. And that's what I've been telling you from the beginning, or I was always mentioning that you shouldn't depend on that copier, because that copier is probably going to blow your account. So you're doing pretty good now. Let's see if there's anything else over here real quick. I just saw your messages in the group trail. Yeah, I can't do anything below 70 either here in California, bro. If it's below 70, it's freezing. That's why I'm wearing a jacket right now, because it was cold this morning. It was raining yesterday. Nice. Rick said started 100K challenge, ready for Monday. So perfect. Yeah. So Rick's signing off. But yeah, guys, I think that's it for the questions. So if you guys have any other questions, I'll hang around for a little bit, for a few more minutes. If not, I'll be logging off early for today. I've been on for about 2 hours, and we don't really have any trades to take. If we had trades to take, I'd stay on, but there just isn't anything for us to take right now. So that's why I'm probably gonna sign off early today, so that you guys can get a head start to enjoy your weekend, because we made some pretty good profits this week, guys. So let me just go through the list real quick. So looking at what everyone did this week so far, it's funny seeing this, a 49ers gift. But anyway, so let's see, this week started on, when did this week start? This week started on the 21st. So if I go back to the 21st here, you guys can see, here's the timestamp for today. And I'll just make this a little bigger. So you guys can see this is a timestamp where it says today, right? So these are all the profits from today up until the 21st. And these are all different members in K2. It's not just one person. There's like 100 of us. There's like 300 of us here who are sending profits every single day. So here's the 25th. And I'll just show you profits as you scroll up. So here we started from today. Stephen made about 50 bucks. Trell made 700. He's the one that's joking around in the chat over here. That's Trell. So he made profit off that right there. Joey over here made 1,999. Kimmy made 70 bucks, 40 bucks. Mandra over here made 1,000. And this is all from today. The 25th yesterday. This is Ivarius. He made about 12 bucks off there. And you guys can see you make profits on small accounts and big accounts here. You don't have to have huge accounts to trade with us. Angela made 500. Steven made about 60 bucks there. Kevin over here made about a couple $100 right there. He was like, bro, those sales this morning on US 30. So if you guys sat in on my session yesterday, you guys would have made some profit just copying my trades. Paul over here made about $1,000 right there. That was yesterday. Steven made about a couple $100 right there. Dimitro made about $100 right there. Mark made about 23 bucks there. John made 2,059. And as you guys can see, we everyone in K2 does pretty well, and we're pretty profitable overall. As long as you guys, follow everything properly. Ed over here killed it. Ed made about 10,000, I think, this week, trading from Tuesday until now. Sisuk made a couple $1,000 there. And as you guys can see, if I scroll up, I got days and days of profits here from everyone in K2. Because whenever we profit, we all save everyone's profits, and then we share them with the public group and everyone else in K2 at the end of the day. So nice work, JR over here. He joined K2 kind of recently, locked in about 1,000. Quinn over here, he's been killing it every day. He's like, yo, I'm gonna go to the gym. This dude locks in 1,000, 2,000, 3,000, and he's like, I'm gonna go to the gym. Comes back, locks in another 1,000. So nice work to you too, Quinn. We have a lot of new members here who've just been killing it. Luke here, he joined us last week. Dude, this is Neptune. Luke, he locked in 617. Nice work, Luke. Gerald over here locked in about 400. So as you guys can see, if you guys are looking for a group to trade with, we're literally a family here at K2. Everyone profits. Saquon over here made about 8,000 off that day. It's crazy. Noel over here made 115. If you guys want a good group to trade with every single day, well, we trade every day. You guys can watch any of my live streams, and you guys can see that I literally trade every day. I take no days off. Josh over here made 2,000. Because when I'm making profit, you guys are making profit. And when you guys are making profit, I'm here celebrating with you guys regardless. So nice work to everybody here. It's pretty good overall. So I think that's about it, guys. If you guys have any other questions, feel free to reach out. I'll be around wrapping up all of the back end work for K2 to close out this trading week. But yeah, other than that, hopefully you guys grab some value on your way out. If you guys can like the stream, that'll definitely help us continue to grow this channel and find more people who want to learn from us here. So, that's about it. Have a great weekend, guys. And then I'll catch you guys back here on Sunday for the weekly chart analysis where we kick off another trading week. So let's see, Josh, did I also post notes on the group for the 3-minute? Yeah, so if you guys are in the premium, you guys will see here that Josh is always posting notes. He marks up his charts and he shows you guys exactly what he's doing here. So from this morning, from 6 a.m., he has 4 wins and 0 losses. So just keep that in mind, guys. We're all here to help. We want everyone to be profitable here in K2. Like, there's really no competition here. The only person you're in competition with is yourself. So as long as you're with K2, we're going to trade as a team and we're all going to keep locking in these profits. But yeah, guys, so have a great weekend. Be safe and make sure that you guys come back on Sunday to make some more profits. So have a great weekend.